trends, particularly production discipline, China's supply positioning, and regional premium movements. Now, I now invite Mr. K.Y. Chin, a senior aluminium analyst at Shanghai Metal Market, specializing in research across the global and Chinese aluminium value chain. His work focuses particularly on secondary aluminium and aluminium scrap markets, while also maintaining close coverage of primary aluminium sector. Through continuous engagement with producers, recyclers, and international traders, Chin provides the industry with timely market intelligence, price outlooks, and in depth analysis of supply demand trends. His research also closely tracks global policy developments related to metal recycling, sustainability, and the transition towards low carbon metals. With strong expertise in pricing mechanism and evolving market dynamics, Chin offers valuable insights into how the aluminum industry is adapting to changing global patterns and sustainability imperatives. Chin, we would greatly value your insights on how global adjustments and Asian premiums may shape H1 2026. The floor is yours, Chin.
Hi, thanks. Hold on, let me share my presentation. Hold on. Hi, can you see my presentation now? Right. So, as all of the speakers previously have mentioned or touched a lot on the Indian market, I'm here to provide some analysis from the global and Chinese market side, which may be of interest to Indian consumers as well. Because China is, as everyone knows, the biggest producer and consumer of aluminum worldwide in general. All right. So now we have a look at upstream aluminum supply constraints, as a lot of speakers have talked about China's supply cap. Currently, we know that it's at roughly around 45.5 million tons, and it's been hitting the 45 million ton cap around last year. So in 2017, China implemented this to prevent the oversupply of aluminum resources. And last year, China produced around 45.02 million tons, which was is already relatively close to its cap at 45.5 million tons, which is something that most aluminum players are currently looking out for. Also, other than China's policy cap as well as production cap, we are also looking at other geopolitical factors around the globe. Currently, Europe, including Russia, accounts for 9.5 to 10% of the global aluminum production. And currently, Russia, as everyone knows, is the second largest aluminum producer, is currently being sanctioned by a lot of countries, especially the West, due to an ongoing invasion of Ukraine. This also leads to a reduction of available aluminum for the West. And as recently as this month, the Middle East accounts for roughly of 8% of the global primary aluminum production and is currently caught in between the US, Israel, and Iran conflict, with some producers such as Alba temporarily suspending their aluminum production. And Qatalum have just announced yesterday that they are now holding their production at roughly 60%, which should take part by the end of this month. For India, this is important as simultaneous constraints across China, Europe, and the Middle East establish higher price floors and actual upwards stress for the Indian and Asian imports of primary aluminum in general. Now, something that might be of interest is the supply and demand scenarios for the entire globe following the Middle Eastern conflict right now. Now, we look at scenario 0, where we predict if without conflict or without any disruptions in general, the supply and balance should generally be all right or balancing out each other in the year of 2026. Now, we move on to scenarios 3, which is the most important one, where we predict is most likely to happen. Firstly, with the transport through the Strait of Hormuz disrupted, blockades we expect to last for more than a month. This would largely affect the transportation of aluminum through the east and west through the Strait of Hormuz in general. And also Iran's aluminum industry, which is small but also impactful, will also suspend its aluminum related projects. This is likely to lead to a large supply deficit in general for 2026, roughly accounting to roughly 3,000 kilotons worth of supply deficit when compared to the demand as predicted by our models. Now, we also look towards primary aluminum trade flows, which we think are important as well. Even though the Middle Eastern conflict has created upward pressure on LME aluminum prices, a lot of people have also asked us how come the Shanghai FE aluminum prices have not seen a similar upward trend, or the upward trend is not as strong as the current LME situation. This is partly due to high Chinese aluminum inventories, primary inventories especially, which are currently keeping SHFE prices down much more when compared to LME prices. This creates a larger difference between LME and SHFE prices, and also in return causes a larger loss for aluminum imports into China, which is important. Since 2024, even though China has not seen that much of a price difference, we can see on the bottom graph that China has not seen a suitable import arbitrage for importing aluminum in general, because it's always been at a loss since 2024. Current aluminum inventories in China are actually very high, and it also leads to a lower demand for imported aluminum, not to say just aluminum in general, because currently the consumption in China is relatively low compared to, let's say, overseas markets. Now, general arbitrages for imports for aluminum, primary aluminum ingots, or let's say primary aluminum in general, should be around a 2,000 to 3,000 yuan per ton loss. But recently, as the war has progressed, it has also hit 4,000 yuan per ton losses, as we can see according to the graph. Now, something else that's important is also tolling and imported materials processing, because this is also a big part of China's aluminum trade. Due to the differences in price calculations for LME calculations as well as SHFE price calculations and the Middle Eastern conflict going on right now, it actually makes it much less desirable for Chinese businesses to continue provide tolling services, actually closing down a lot of the imports that are done for tolling and imported materials processing as of this month. So this also creates less imports into China in general. Now, even though we say this creates a lot of less imports or less competition from China, it is unlikely that China is going to raise its production cap or have a hand in the market for the LME aluminum in general, causing the price to come down for overseas market actively. China is most likely going to remain rather neutral or more focused on its local production and industries, rather in the short to medium term. And global supply is likely going to be affected, but China is not going to be taking a big part in relieving or helping out in this short to medium term change. Now, tighter supplies and higher demand in general will across India and other regions will also happen as they look to replace supply from the Middle East, as previous speakers have stated, especially for India, where it's highly reliant on Middle Eastern imports for aluminum. Now, as we finish on primary aluminum, we should also bridge a bit into secondary aluminum, which is also equally important. And China and India are both the biggest players for secondary aluminum in Asia. Now, amidst high domestic growth and tight supply in India, India is absorbing a lot of European scrap and Middle Eastern as well. And also recently, we have also gotten a lot of reports that actually Indian buyers have also been actively looking in Southeast Asia to consume or buy some ADC12 with prices quite high when compared to actual local trading prices in India. I'll touch on that slightly a bit later. As we look into the UK and Europe first, high prices for high grades of aluminum scrap in general across Europe as of now, it's relatively unchanged because inter-Europe trade is still rather fine. But it opens up arbitrage windows for European scrapyards to export secondary grades, lower class grades of scrap such as TENS and Tintaber into Asia. This is mostly consumed by China, India, as well as Southeast Asia, primarily being Thailand and Malaysia. Now, CBAM and potential export tariffs in spring 2026 are both very important parts for the Asian secondary market to take a close look at as well. Even though the current tariffs for exporting scrap from Europe have not been announced yet, but it's likely going to be affecting a significant part of certain scrap grades, especially high-grade scrap such as 6063 extrusions, as well as certain grades such as trauma or wheels. Now, this might affect outflow of high-grade scrap materials into Asia, primarily India and Southeast Asia, where these kinds of grades are more sought after when compared to, let's say, imports of European scrap from to China. Now we look at Southeast Asia, who is also a large importer of scrap. Recently, prices have been rather high for both scrap and ADC12. In this week alone, ADC12 has saw probably a 200 to 300 price climb, reaching as high as 3,400 reported prices, not prices that have actually been signed. Signed prices recently, we are expecting around 3.3 thousand US dollars per ton for ADC12, mostly exported to the Japanese markets and to the Indian markets. These are the two biggest players out there right now that are currently sweeping up stocks around in Southeast Asia, especially Thailand and Malaysia. Now, lastly, we look at China. For China, currently consumption for ADC12 and secondary grades are rather low, such as primary aluminum is the same, where current consumption is just generally on a low end, especially when we are just returning from Chinese New Year in China. So it's likely going to be slowly regaining some traction, but it will still take some time when compared to previous levels. Now, for India, this is also important as these markets are all getting quite expensive for secondary scrap, especially due to the Middle Eastern conflict. And it's quite surprising, certainly, for some Indian players to be purchasing ADC12 around Southeast Asia, which is something that we have not previously been expecting, especially upon this high price hike, with certain reports going as high as 3.4, which is only roughly $100 down when compared to the LME prices right now. So this should mark the end of my presentation in general. And if you guys have any questions, please feel free to add in the chat box and we'll help out to answer certain questions.
Thank you, Chin, for that insightful perspective on global aluminium markets and the evolving dynamics across the value chain.